Well, the focus of markets this week was always going to be on the mid-March Fed meeting, for which the minutes were going to be released this week, and that's come out. Of course, with it is also a bunch of commentary of key Federal Reserve governors who have informed markets that the Fed has the appetite as well as the willingness to increase rates and reduce its balance sheet. Now, in terms of specific comments, well, the minutes indicate a higher level of urgency in shrinking of the balance sheet. In fact, they've said, or they've expressed a willingness to reduce the balance sheet by $95 billion every single month, which is around 1.1 trillion over the next year or so. They are also willing to hike rates by 50 basis points more than once over the next couple of quarters. So that clearly signaling to markets that there is a willingness and there is an appreciation on the amount of inflation in the system, and the Fed is willing to do something about it. And that has of course led markets lower. So tech shares saw the largest sell-off again, and all three US indices closed lower. In fact, when we look at the Dow, it's down around 0.4% in trade on Wednesday. The S&P 500 fell sharper than the Dow, down almost 1%, and the US Nasdaq was down over 2.2% or thereabouts. When we look at the US futures in early trade today, that's lower as well, clearly signaling a negative start, especially for global indices. And that has poured in straight into Asian markets in early trade today. In fact, when we look at Asia, the Nikkei is lower, the Shanghai is lower as well. In fact, all Asian indices lower in trade. The Nikkei is down 2%, Shanghai down over 0.5%, so is the ASX 200, and the Kospi also down around 1.4% or thereabouts. When we look at the SGX Nifty, also a negative start for the SGX Nifty, below that 17,800 mark as we speak. In fact, down over 0.5% as well. So sharply lower cues coming out of indices early today. When we look at commodities, well, good news for oil prices. They are lower, they're tempering lower, and sharply lower is what the trend is currently signifying. It's below the $98 a barrel mark. Definitely good news for emerging markets as well as India. Despite the hawkish Federal Reserve commentary, gold has managed to hold on to that $1,825 an ounce or thereabouts, and that's definitely a good sign, and that's obviously backed by the fact that inflation is red hot at the moment. So the go-to commodity will continue to be gold. In terms of how bond yields are faring, of course, there is a lot of positivity around bond yields given the good hawkish Federal Reserve commentary, and bond yields have gone up to 2.6%. In fact, breached that mark in trade yesterday before tempering back downwards. Of course, the immediate impact will also be on crypto. Crypto, in fact, Bitcoin fell over 5% in trade, in early trade today, is at around the $43,000 mark. That's how we're looking at global indices in early trade today. A negative start expected for India.